Good evening, Jamaica. Hope you are staying safe and healthy. I'm Anna.
And I'm Sheena. Welcome back to Bank of Jamaica's Centrally Speaking. Centrally Speaking is a program that opens up the conversation around important matters of economics and finance, matters of national importance that have an impact on your life.
Stay with us as we attempt to simplify economic matters in a way that you can understand. This week, we're tackling inflation target yet again, not for the first time. Today, we'll get an update on BOJ's inflation targeting performance from a guest that you've met before.
So today, our resident advisor on inflation will be joining us, Dr. Wayne Robinson, who will be telling us all about what has been happening with inflation targeting.
But before we get Dr. Robinson's update, let's go into the streets, see what they have to say. Have you noticed any change in prices since the pandemic?
The price of goods, they go up when the COVID-19 they just come in, but now everything kind of settle back down, you know? Yeah man, everything kind of go on back down now. Because the price them they raise up high when COVID just come, but it's a good on back now.
The prices are different, especially when you go into the market, because before COVID, it wasn't so bad. After COVID, everything's sky high.
All right, since the virus there, everything changed because what happened now, them say, you know, rain now fall, farmers are boss, everything gets jolted and mashed up, so look, product them have leave back to the field. Then so right to the year they don't make no money. So they raise all the price for the goods them, so they have to make a little money now. But we can't complain because we buy it from them.
Ever since COVID-19, the prices have increased, you know, very, very high. You know what I mean? And it seems like who are selling don't care about the people. So we notice in the marketplaces when you go and you get garlic for a certain price, you go back another week, it's 3-4 times, doubled, you know, tripled and doubled, you know what I mean?
Higher. We can't even buy food again because you can't pay high something. When we go in the supermarket and things that we have spend on 5,000, things that we have to take for 2,000 at $10,000 right now. We have to wonder how we going.
We wish the government could do something more for the taxi people. Like for the gas price, roll back the gas price, because almost every week we hear gas, a raise. Now it's a crisis, yeah.
I can't charge them more. Whatever they say they have, me have to just do it because I can't bring it home. You understand? And some we say this they have and whatever, and we still have to have lenience for others because a lot of them don't have no job. But what I'm saying, there is no mercy for none of us with nothing that we have doing. Because right now, even the other day, some of my customers who sell me chicken say, chicken never raise. And if we buy it raise the price and we don't have the much customers, there's a problem there.
Welcome back to Centrally Speaking. Today, our guest is Dr. Wayne Robinson, Deputy Governor with responsibility for research and economic programming and financial stability at Bank of Jamaica. Dr. Robinson will be updating us on the inflation targeting performance. Dr. Robinson, welcome back.
Thanks, Sheena. Thanks, Anna. It's good to be back.
Good to have you back.
To see you.
Yes.
Dr. Rob, we already know from discussions with you that the inflation target was set by the Minister of Finance, the target of 4 to 6%. So can you remind us why is this the target and not a lower one like 2 to 4?
We all want low inflation. In fact, our ultimate objective is for Jamaica to enjoy the rates of inflation that we see in our trading partners. That is inflation below 3%. But the big question is how quickly we can get there. And not just to get there, but to stay there, which is what is important. If Jamaica should try to achieve an inflation rate, say, of 2% or 3%, which is what we want in the near term, it would mean that Bank of Jamaica would have to apply tight monetary policy. So in other words, Bank of Jamaica would have to be inching up interest rates progressively. Now, of course, if we do that, that would make the cost of doing business in Jamaica much more expensive because it would increase the cost of borrowing by businesses and also the cost of borrowing by households, you and me. So what that would inevitably result in is really a contraction or lower economic activity. Now, if you consider the fact that Jamaica for many years has experienced low or no growth, then what you realize is that if we should adopt that posture, we'll just be perpetuating that condition of very low and no growth.
And this is if we target a lower inflation range.
If we had a target a low inflation rate, which would require us to tighten or raise interest rates in the economy.
Okay.
So of course that would not be desirable.
Right.
So faced with this dilemma of the prospects of really extending a period of low growth, the government decided that it probably would be best for Jamaica to work with an inflation rate between 4% and 6% per year for a little while, which would give the country the breathing room, the breathing space for it to grow. By taking this approach that the government has adopted, Bank of Jamaica since 2017, when the target was set, has been able to cut interest rate dramatically to historic lows.
Right.
As such, our policy rate now is 0.5%.
Yes. So with that said, Dr. Rob, how has Bank of Jamaica performed in staying within the target range?
Starting last release, the inflation rate as at March 2020. And that inflation was 4.8% on an annual basis.
As at the end of March?
As at the end of March. So we were within the 4 to 6% range. But also what's important is that for most of the 12-month period running up to the end of March, inflation was actually within that 4 to 6% range. During that period, we were outside the range on only 4 occasions. April, September, October,
and December.
Right.
Before you continue, outside of the period, outside of the target, meaning you're below or above the target?
On the first 3 occasions, we were actually below the target.
Right.
And in December, we were above the target, but slightly above the target.
Above 6.
Above 6. But going forward, we expect that inflation should remain low and within this target range.
So what were some of the reasons why the inflation target was not met April, September, October, December last year?
Well, on the first 3 occasions when inflation fell below the target, we saw a significant decline in oil prices, which led to lower electricity rates and the cost of petrol at the pumps. We also had very favorable agricultural supplies, which actually led to lower agricultural prices. When we actually strip out these volatile components of the CPI basket, what we also saw is that the underlying inflation in the economy was very low at 3%. In December, we had a kind of reversal in oil prices that led to a sharp rise in the cost of utilities. So that caused inflation to jump unexpectedly a little bit above. It's important to note, though, that whenever there are these breaches, the Bank of Jamaica provides detailed explanation to the public and to the minister. And we publish this information, and you can find the explanations in the various reports on our website.
Which is part of the inflation targeting strategy. Yes, to explain why.
Exactly.
Right.
It's a part of our thrust to be more transparent.
Right.
Okay, and on that note, what can Jamaica expect for this year, this fiscal year, which ends March 2021?
The economic environment, both in Jamaica and globally, is characterized by significant uncertainty. And this is largely because of the impact of the COVID pandemic.
Right.
We're certainly expecting that the economy will contract significantly. Against this background, we expect inflation for the fiscal year to remain low. We are actually projecting that at the end of March 2021, inflation will dip a little bit to 4.5%. Now, we have been seeing some movement in the exchange rate in March, April, and the first part of May. And that depreciation, of course, will impact prices. But that impact will be muted by a couple of factors. One In this environment, we expect that the cost or the price of imported goods, whether they be raw material or finished goods, will be lower. Okay. We have seen, for example, significant fall in oil prices. The other thing that will constrain the inflation during this period is the fact that the economy is contracting significantly. So persons' incomes are actually low. So what this means is that the householders' purchasing power is much lower. So that will constrain the ability of merchants to pass on the price, any price increases. Yeah. In addition, another factor is what is happening in agriculture. Right. You would have heard of this supply, excess supply in agriculture as a result of the closure of the tourism industry. Precisely. So initially, we expect to see that agricultural prices will be low.
Right. But they will stable off because they will adjust to the new levels of demand.
Exactly. Right. But we are also concerned of the fact that because we've been seeing much drier conditions than we would expect, particularly at this time, we should expect some upward movements in agricultural prices. But generally, overall, we believe that inflation will remain in the 4 to 6 target range, more likely closer to the lower bound. Right. As I said, we're expecting 4.5%.
Now let's turn our attention a little bit to financial stability. Yes, yes. So is Jamaica's financial system stable?
Yes. Well, there has been a lot of discussion, both here and abroad, about the financial sector in the context of the pandemic and the fallout in incomes. Well, what I can say, Sheena, is that the Jamaican financial sector is stable. Okay. And sound.
That is good to hear.
Yes, the fact of the matter is that our institutions have more than adequate levels of capital and funds, liquid funds, that it can meet the needs of its customers. Now, Bank of Jamaica and the Financial Services Commission, we have intensified our monitoring of the sector, and we have intensified our stress testing activities. In other words, we have been simulating how the financial sector would respond to adverse and extreme shocks.
Okay. So did you do a simulation for a pandemic?
Yes, all the stress tests and the simulation took all of that
into consideration.
Okay. So we have heightened our monitoring, and we are satisfied that the system is sound and stable and resilient.
We've discussed it already, financial system stability, but could you remind our viewers, and for those who are tuning in for the first time, how do we define financial system stability?
Well, when we use the term financial system stability or financial stability, we're really describing how stable and how sound the financial system is. And when we talk about the financial system, we're talking about the banks, building societies, credit unions. We're also talking about the financial markets. And we're also talking about the payment system. That is the architecture that allows you to use your credit card and use your debit card and do online payments. So when we look at the system as a whole, when we say the system is stable, it means that all these components are operating normally, they are operating prudently, and they are able to do so in both good times and bad times.
Dr. Rob, thank you so much for joining us today. It is always a pleasure listening to you, and as usual, we've learned a lot.
The pleasure was mine, and anytime.
Yeah, keeping inflation low, stable.
Low, stable.
And predictable. And there you have it, Jamaica. BOJ is ensuring that we meet our inflation target. One of the richest countries in the world. Have you ever heard of Luxembourg? It's a small country in Europe that borders Belgium, France, and Germany that is known for its advanced economy. The country has one of the world's highest GDP per capita. The economy of Luxembourg is largely dependent on the banking, steel, and industrial sectors. Banking is the largest sector in the Luxembourg economy, with banks attracting many international investors. The country's focus on financial services has transformed many of its banking institutions into investment banks, and only a small percentage of banks in the country cater to retail banking for individuals. Despite the country's small size, there are over 100 banks in Luxembourg, almost half of which are branches of international banks. The main reason Luxembourg is Europe's main banking and financial center is that its banks have a high level of liquidity. What is unique about the banks in Luxembourg is that they have so many international clients and therefore receive deposits from all over the world. Cash flows in and out very easily. This economic freedom has contributed to the multitude of ongoing banking activities in the country and has helped Luxembourg become one of the richest countries in the world. Today we focused on inflation targeting and financial stability. Now let's get to the facts. Number 1. Bank of Jamaica's 4-6% inflation target is optimal for Jamaica at this time as it allows the government to reduce its debt levels while encouraging a faster pace of economic growth and development. Number 2. Bank of Jamaica has performed well in ensuring that inflation remained within target during the fiscal year. Number 3. The inflation rate at March 2020 was 4.8%, and for most of the prior 12 months to March 2020, Bank of Jamaica was able to keep inflation within the target. Number 4. Whenever the inflation target is reached, the bank provides the public and the minister with a fulsome explanation. We use various media platforms to inform the public. And number 5. The bank is projecting that inflation will end this fiscal year at 4.5% within the target range, but closer to the lower end of the band. And that's it for our Fast Facts. That's it for our program this week. Follow us on Twitter at CentralBankJA or on BOJ's Facebook page and our YouTube channel. You can also visit our website at www.boj.org.jm.
We also invite you to tweet your questions and post your comments to Facebook. And of course, watch Centrally Speaking next week, right here on this station. At the same time, we'll have another special guest. Thanks for watching.
Thanks for watching. Centrally Speaking is a production of Bank of Jamaica.